Welcome back to Market Day Report. I'm Scott Shelby, otherwise known as the Cow Guy. It's going to be the Mad Cow Guy after this day's over. Boy, oh boy. Markets are swinging all over the place, and again, they've taken another dive for the worse here. The Dow down about 450, so that's going to pressure on markets. Let's take a look and see how much that's pressure on markets. At corn table, let's bring that up. It looks as though we probably lost some more, and we have. March corn's down 18.25 cents, 564 last. That's a tick off the lows. May down 18 cents at 567.75. Again, a tick off the low, and now we just ticked on the lows. So we're on the lows in that corn market with the equity markets taking another leg lower. How about soybeans? Jan's down 17.5 cents at 12.24. Even, that's 3/4 of a penny off the lows. We've got 18.75 cent loss in the March at 12.33 1/4, which is a tick off the lows there. So both corn and beans trading on their lows at this moment in time. How about Chicago wheat? Chicago wheat March down 27 cents at 7.95 1/4. That's a penny off the lows in Chicago wheat. May's off 26.5 cents at 8.02. And that's 3/4 of a cent off the lows. So again, wheat in the same vein as corn and beans. What about Kansas City wheat? The hard red wheat in Kansas City. That's got March down 28.25 cents. Oh, 8.29 is last, a half cent off the lows in March. May's down 27 cents at 8.28, which is a tick off the lows in May. How about, let's take a look at Minneapolis wheat. 15.75 cents lower in that March contract at 10.29.5. May is off 15.5 cents. And then let's take a look at cotton. This one was really taking it on the chin. Got a $5 loss at 106.41 in that March contract. Let's bring in Brian Hoops from Midwest Marketing. Brian, you can tell by the exasperation in my voice, it's not a nice day to be here saying these prices. You've got any good news or a little bit of a silver lining for us?
Yeah, I wish I had one, Scott. Hopefully we're going to find some support in here at some point and turn this market back to the plus side, but it may be a slow go. We're getting a hit from crude oil being down and the stock market being down. If any of those could reprieve, find some support, and start to rally back, then maybe the grain markets will follow suit. But right now, we're running stops underneath these markets and technical stops being triggered. Corn was probably the last market to take out last week's lows, but it's done that and ran thousands of stops below it. So at some point, I think we'll find support here and some stability. But it may not come right away here. We've got to hold technical support and see if we can get some support from these outside markets and give us a little bit of a positive influence. The fundamental news, I think, isn't all terrible. Wheat had a little bit of negative news with the more than expected deliveries, and that caused a spread between December and March to widen out to actually more than full carry. And that, kind of started this market pushing lower was wheat and negative news from the deliveries. But normally we do rally after we get through this delivery period and start to see some strength into the month of December.
Well, what you have to do is you have to kind of put yourself, I tell it to customers all the time, and when traders back in the day when I was trading, you have to put yourself in the mind of a buyer. Give me a reason to buy. Right now, there's no reason to buy, right? I mean, some sort of turnaround, some sort of bounce, some sort of technical reason, but it's that short-termism disease that we all get. If it looks like the market's going to, it just went lower, it looks like it's going to probably go lower again. And until that stops, you won't see the buyers kind of step in. So we're going to need to see something. Maybe it's technical that helps turn this thing around. Right? Stay right there. We're going to go away, pay some bills, come back and talk livestock with Brian Hoops from Midwest Marketing after these messages. Welcome back to Market Day Report. Thanks for sticking with us if you stayed with us. It's going to be changing every 15, 20 minutes here. The market's been all over the place. I really appreciate you tuning in. And hopefully we can give you some insight and get these numbers to you in a timely fashion, but also with some good meaning behind it. Let's take a look at what the markets have been doing with the livestock. How about livestock? We'll start with live cattle. Live cattle, February off $1.47 at 137.82. So this has been adding to its losses. It wasn't off as much as this the last time we checked. April's down $1.42 at 141.10. How about feeders? Feeders were higher because of corn really getting hit, but even now feeders have turned over. So this is kind of a double negative. We don't like to see that. Jan's off 62 cents at 165.10. March is off 35 cents at 166.20. And then lastly, let's take a look at lean hogs. Lean hogs are going to be, well, we can't really say mixed. Deese is kind of going off the board here. Feb down $1.40 at 79.52. April down 95 cents at 84.95. Let's bring back in Brian Hoops from Midwest Marketing. Brian, you know what? I don't like to see that. And it almost looks like something came out, or there was some sort of news that I've been, I've missed somehow. But is there anything out there that may have turned even feeder lower, and even though we've seen even more losses over there in corn?
I haven't heard any news that would drive us lower. Certainly negative with the live cattle being sharply lower, stock market being down. We have heard the show list numbers that were released yesterday, kind of a real bearish number, about 15,000 head larger than a week ago, 235,000 heads. So numbers this week at least increasing quite a bit. I think that's putting some pressure against the live cattle market, and as well as the strong seasonal tendency that we have to work lower until about the second to third week of December, all seemingly coming together to weigh on the cattle. And I think that's what's pulling the feeder cattle lower despite the sharply lower corn prices.
Yeah, I mean, this is one of those days we're going to try to make sense of it all, but a lot of times it's just going to you get caught in the wash, right? So sometimes, again,
Right.
we say this every now and again, sometimes it is just let the market do what it's going to do. It's going to be difficult. And unfortunately, if you have to do something today, that it'll probably be wrong. But at the same time, it's not a bad thing to kind of take a step back and let things do what they're going to do. All right. I really appreciate you being on, Brian. You really helped us out today. That's Brian Hoops from Midwest Marketing. I'm Scott Shelley back here in Nashville, and I'm going to throw it over to Tammy.